Trading strategy analysis using EMA200 and support/resistance levels. In this tutorial, we'll analyze a trading strategy using technical indicators on a price chart. Let's break down the steps. 1. Initial assessment. Take 5 seconds to decide, are you buying, selling, or waiting? Observe the chart. 2. EMA200 placement. Place the Exponential Moving Average, EMA, with a period of 200 on the chart. Note that the price has been declining, indicating bearish sentiment. Observe whether the candlesticks have crossed above or below the EMA200. Look for potential bullish signals. 3. Double bottom pattern. Pay close attention to the candlestick patterns. You might notice a double bottom pattern, which suggests a potential upward move. Keep an eye on the price for confirmation. 4. Drawing support and resistance lines. Draw a resistance line and a support line on the chart. Observe how the candlesticks interact with these levels. Multiple touches on a line indicate its significance. 5. Waiting for confirmation. Be patient and wait for the price to cross above the support line. After crossing, observe if the support line now acts as resistance. Look for a pullback to the support-resistance level. 6. Entering a long trade. Once confirmed, enter a long trade. Set your risk-to-reward ratio, e.g., 2:1. Place your stop-loss just below the recent price low. Congratulations! You've successfully applied this method to capture profits from the market. Remember to adapt this strategy to your risk tolerance and trading style. Happy trading! Chart increasing money back.